If you've been waiting for the right time to buy stocks or thinking about when the best time is to rejig your portfolio, this could be it. Quarter 2 is when big money starts building positions ahead of August earnings. And so tonight we give you 8 ASX stocks primed to run into the second half of the year as the brains trust behind Australia's leading government-accredited trading education and market insight that is regularly called upon by major media outlets. We'll show you the professional stock market playbook that actually works. I'm Dale Gillam, joined by senior analyst Philip Tortevsky and Pedro Banales, and we are Wealth Within. Good evening. Phil, how are you?
Good evening. Good, yes. Nice Easter break.
It is a nice I've had a long break because I've been to New Zealand and everything, haven't I?
Trekking around Australia.
I know. First time
internationally, sorry.
Well, internationally, yes. I had to go over and speak in New Zealand, but it's nice. It's nice. We don't have Janine. She's on holidays at the moment with school holidays, but we do have the amazing Pedro. How are you, mate?
Doing well, guys, and welcome back, Dale. Great to be back on.
Looking forward to it, firing up for this last quarter of the financial year and obviously the next quarter of this current calendar year. But okay, let's dive into it right now. Why is the second quarter of the year usually a strong candidate to start building a stock portfolio? Because we've got, obviously this is quarter 2 calendar year, but it's also the last quarter for the financial year. So why is this important?
Oh, it's so important. I mean, the dust settles from our first bout of earnings, which happens around February. So, you get to see what companies, how they've responded to their most recent earnings call. Then you have, I guess, the seasonality aspect of April and July being the two strongest months on the ASX of the year. And then we have naturally the big funds, they're not buying, stocks a day or 2 days before events. They're building positions, getting ready for that next bout, which is usually that 3-month, window. And then we've also got, as you said, end of financial year, another time to rejig and lock in certain things.
And dividends, I think.
Well,
too.
Yes.
Dividends, with all those earnings reports coming out from February, we should be looking at some good dividends.
Yes.
Hopefully for your portfolio. But anyway, let's get Pedro's thought here. Also, I did want your thoughts, mate. Now, April is seasonally one of the strongest months for the All Ordinaries Index, as Phil just mentioned, but should investors be more cautious about this April given the geopolitical factors that are at play at the moment, or that Trump effect that people talk about? So what are your thoughts, mate?
Yeah, well, look, April's seasonally the second biggest month on our market. On average, for the last, since the 80s, basically, it's a very big month. Like Phil was saying, that this is when the managers are positioning themselves for earnings coming in August. But we've also got this huge tailwind of commodities that's really propping up our market at the moment. Our market is mainly made up of the materials, and the commodities boom has really been helping us out there. So whilst, March was a fairly down month due to the geopolitical risks, April's actually been holding up quite nicely. So that's a few factors, ranging from seasonality and also that commodities play that we are fortunate to have here in Australia.
Yeah, I think you're right there. And I know, because I was in New Zealand speaking for a wealth club over there, and it was interesting how everybody's really nervous about the market and they're wondering why I was so excited about it. But we'll get into that tonight. So we're going to take you through 8 stocks. So let's get into the first section of those, Phil.
All right, let's go. First up is Macquarie Group. Now, these are the stocks that are, we've put them with a train of thought of thinking about, preparing for earnings and in light of the situation we are in right now. So there's some defensive plays, some really good commodity plays, but I won't give away too much. You're going to have to watch to see them all. Okay. Let's start with Macquarie. Now, traditionally a very safe, strong stock. When we look at the monthly chart here, you look at Macquarie over history. Yes, it's had its pullbacks, most notably during the 07, the financial crisis was a big one, another one in 09. But when you look at the way the most recent correction has happened and the fact that Macquarie does generally appreciate over time, it's a company that knows how to build share price appreciation. The most recent fall is very much like what we saw around that COVID period, which was really, specific to a certain catalyst unfolding. This time it's oil, that time it was COVID, and then we've also got the, the tariff situation in there as well. But the fact that we've recovered that period there, that almost flash crash is what makes me look at this scenario here. And now we're getting Macquarie finding, a bit of a stability on the upside, but also starting to compress on the downside. And we're holding this particular level here at $90 or $190, which for me is crucial. As long as Macquarie holds 190, and the way it's starting to, I guess, build a position right now, if it can start to take out that 222, I think Macquarie has a good chance of breaking 240. And, some of those catalysts, I mean, it's leverage to markets and infrastructure. It's obviously a beneficiary of volatility, and it is favoured, one of the ones that's favoured into reporting. So I think beautiful stock in trend. Really, when you talk about, and you said it just a second ago, people are to some degree freaking out about the volatility because there's so many questions I'm getting around, should I trade different? What do I do now with Trump? And it's like, well, what lens are you looking at the market in? Because we can show plenty of stocks here where it hasn't affected it at all. In fact, it's very minute. So, and I look at Macquarie to say, right now, this stock, nothing has changed despite everything that is going on around the world. It's still in a really nice uptrend and consolidating sideways. It's not breaking out, any lower than it has during that tariff period. So, yeah, they're the two levels. But
Macquarie is you don't treat Macquarie the same as you would treat the Big Four because it's a different bank.
Yeah.
It's not a retail bank as such, even though people have retail accounts with it. It's more of a merchant bank, and so it's doing different types of things. But to me, I look at Macquarie and I treat it a little bit different than I would CBA or Westpac or ANZ, etc. But that question that you just brought up about, well, what do I do the volatility? I actually had that in my presentation.
Yeah.
In the room full of people. And I said, my answer to that was put your hand in front of your face and what can you see? And they all yelled out at my hand. And I go, great, because you're not seeing anything else. That's how most people look at the stock market. They stick their hand in front of their face and that's all they're seeing is that. So all they're seeing is Trump. All they're seeing is this volatility. All they're seeing is what's on the news today. I turned on the news this morning and I got depressed within the first 5 minutes and turned it off. It's like, that's all you're seeing. And if that's all you're seeing, you're making decisions based on that. Whereas you and I know is the bigger picture is far more important about what's going on. And as you said, with Macquarie, nothing much changed. This whole volatility, Trump factor, tariffs, all that sort of stuff, nothing much has changed. And that's really what I was saying to all the investors in New Zealand and what I'll say to you at home. If you're worried about this volatility, then you're looking at things way, way too close. And often the best solution is not to go closer, to get more data, more information. It's often better just to go the other way, pull back from it all. And that's really what I'm suggesting. But I'm sure, did you want to make a comment on that at all, Pedro?
Oh no, I really like that comment about having your hand in front of your face because you're not seeing the wood for the trees, as the saying goes. You really have to focus on that bigger picture, and that's something that a lot of traders that come to us don't realize. That they're looking at daily charts, they're looking at all these micro movements, and they're not looking at that bigger picture like we do here, focusing on that monthly, weekly chart, especially as traders. It's so important.
Do you want to take us into the next stock, mate?
Yeah, sure. All right. So next one is coal. So this one is a defensive play. This one looks pretty prime to take off, and you can see it's staples usually outperform in uncertain environments, and we are definitely in uncertain environments at the moment. Consistent upgrades when margins surprise. So, what I see there is the ability to put up prices. And the people have to accept it, unfortunately. I mean, that's the truth of it. If they have their bottom line increase, well, you better believe that they're going to pass that on to consumers. And that puts them in a position where they can actually benefit from inflation. We saw these retailers fly during COVID. If you only have to go back, Coles actually IPO'd just before COVID, and look at the rise that it had during that COVID period. It was actually one of the ones that outperformed, up 72% from that low. So you can see that in times of uncertainty, these plays actually do very well. Now, let's put on a trader's hat for a second here and really just focus on the technicals here, because trading is a game of probabilities. And if I was to tell you that 4 out of 5 times when a stock does a certain pattern, it's going to rise, well, you have to take notice of that. And that's really how it works. Look what it's done over here back in 2024 when it had this consolidation. It broke out of it. Then back here in November 2024, had a consolidation, broke out of it. Again, 2025 had a consolidation, broke out of it. Now we've had a pretty big, I would say that this is more of a correction rather than a consolidation, just because of the nature of it. It's almost at 20%. But have a look, we're breaking out of it right now. And I would say that if prices hold up above that previous peak, which is around that $22, say, just to round it off, if it holds up around that $22 and then keeps rising, I think Coles is actually well positioned to continue that uptrend. Of course, the risk is that we're going to have some type of period like we had after 2020, where it was just in a sideways consolidations for around 3 years. It could do something similar now. But hey, if it does give you that range, as traders, you can profit from that short-term volatility. But I think at the moment, Coles is definitely one to watch and on the precipice of a possible uptrend.
Yeah, supermarkets are really good at making money. We've seen that with their monopoly with Coles and Woolworths. But you also brought up a really good question, and you brought that up earlier too, is should people have the same strategy? Should they change it? What do they do with the volatility? We're actually going to answer that question a little bit later with one of our viewer questions, so stay here on the channel and we'll answer that question for you shortly. But let's get into the next stock. So you want to take that one away, mate?
Yep. All right. Northern Star is our next stock now. In this environment, it's always a safe bet to have a little bit of gold exposure. The gold price has been, as you know, Dale, going for a really nice run. But we've seen a correction, and we saw a correction a few weeks ago, and we made a nice little video out there. If you haven't watched our YouTube video on gold over the last month, please go check it out, because we explain in detail why we expected a top in gold, why it occurred, and why right now might be the moment that we might see a reversal and a resumption of that uptrend. It is on our Wealth Within channel, so check that out, please. But back to Northern Star. If you want gold, why not go to the biggest gold player on the ASX, right? And looking at almost a 40% discount right now. This stock's come off 46%. But what makes it so attractive to me? Because again, regardless,
it's strange, because you'd think war go to safety, go to gold stocks. Well, gold. So.
Yeah, well, it made sense, because once the retail speculation went euphoric in terms of gold, like we had a chart showing, who was controlling the participation of the market, and it was really, really retail dominated. At extremes, we saw people lining up.
I was going to say that, yeah, people lining up out all the gold shops in Sydney and everything else. I'm like, well, now that tells me the peak's happening.
Yeah, and we got that, right? And we got the correction, and now we're seeing the other dynamic, the other end of town, the big end, starting to say, okay, well, maybe now there's opportunity here to pick up some positions. And when we look at it on a technical lens, on this trend line, really what's happened with Northern Star, it's bounced exactly off that momentum at 17, found buying. We've gapped up this month in April, gapped up from the previous close. So we are seeing buying coming into an area that we would expect buying. So that is what is really exciting about Northern Star right now. And if it continues this trajectory in these uncertain times, having a little bit of gold exposure, especially this one, you're looking at some nice potential on the way up. Obviously, that is the way that correction happens. So just think about that. Maybe go through the history of the stock and have a look at other times where we've seen these really flash moves, and that is a clue in terms of how quick we may see it do the opposite, or whether or not we see a structured move further down. So that is the line in the sand for me right now. Hold $16. But we need buys to get involved quick, because if they don't and we see a reversal, the stocks start moving back down, then that may lend itself to a structurally more bearish play. But right now, that doesn't look the case. I think more opportunity than not.
Good. To me, there's a difference between being a trader and investor. And obviously how you would handle a stock like this would be different between being a trader and investor. And obviously we're going to talk about in a little while about how you might change your strategy there, because obviously volatility is a bit different at the moment. So we're seeing a whole lot of stuff. So it'll be interesting to, as I said, this when we get into that discussion, Phil and Pedro and I are going to be chatting about the volatility, what you need to be doing, because you can't just jump into a stock nowadays thinking it's doing something. It's making sure you got the right rules and that structure set up. So we'll get into that in a minute. But I love this stock at the moment, because to me, that's what I was saying in New Zealand. Their stock exchange, I looked at all of their top stocks and I went, this is amazing what your stock exchange is doing right now. It actually outperforms the Australian stock market. It blew me away. It was outperforming it, and some great looking stocks and stocks like Fisher & Paykel Healthcare and a few of the others. A2 Milk's another Kiwi stock.
Yep.
And to me, I was looking at it, I'm saying you've got some great stocks here to profit on right now if you understand what you're doing and just have a few rules around it. So I'm looking forward to get stuck into that. But I'm going to go to you now, Pedro, for our next stock. Which one is it?
All right, next one we have Nickel Industries. So this one is actually looking quite nice. And now I do have to warn, it's a little bit off the...
You said that with the last stock.
Well, I'll get all the good ones. It looks like I've got the lucky draw tonight because, I mean, this one is looking spectacular. And I have to say I do like this one a little bit more than Coles. I think it's got further upside potential, although it's a little bit more risky and it's a little bit more illiquid. It's only a 90-cent stock. But I mean, this one is leveraging into EV industrial metal cycle, which is huge at the moment. Operational growth plus cost advantage, and it's seen as a key materials growth plan. To really nut that down, nickel is set to double. The demand is set to double by 2040. So that's not very far away. That's 14 years away. It's set to double. So, looking at the monthly chart, you can see how this could really play into that growth story, because we've seen that expansion phase from 2019 all the way to that peak of 2022. And then we've seen that contraction all the way down to April 2025. But it doesn't take a rocket scientist to realize now with this chart where it's heading. And to me, that's heading up. You can put a nice little momentum there, and it's been trailing that quite nicely. So I think that the key resistance for NIC to break is really, it's at that moment right now. It's that dollar mark. Really, if this breaks $1, it's going to get a lot more interest from the big players as well, and it's going to break a key psychological level, which is very important for these smaller cap stocks. Once they break that dollar, it's like they make it into the big leagues. Now, let's have a look at the weekly chart here. And I mean, textbook pattern unfolding here. And I would urge the students in Module 5 of our course to really study this one, because this is one that you can go back through the history and really understand how pattern work and how price and pattern work together. And if you recognize that, then you could be very profitable as a trader. Basically, the two lines in the sand that I would put down is obviously that $1 mark. But if it trades below, obviously we have to look at both sides of the scenario. If it trades below 80 cents, then I would say that it's heading down to that 70-cent level and possibly not breaking out yet. But it's trading within that range. I think it's looking nice.
Well, mate, I think we've talked about this stock a few times over the last sort of 12, 18 months, and it has done really, really well over that time. But I do like what you're talking about. But to me, people that understand what they're doing really do make the best profitable and dare I say, they take less time to make more money. And if you want to understand how the market works, how to buy, how to sell, how to manage your portfolio, make money with less time and have a bit more certainty around what you're doing so that you're consistently profitable, then how about you get a copy of this book? It's my first book. It's for free. You just got to pay the shipping. There is a link in the description below on the video. So grab your copy of it. Grab a coffee while you read it, but grab a copy of that off our website and actually understand what the market's doing, because I can guarantee you that what's happening now in our market now wouldn't worry you if you follow the rules in that book. But that does wrap up our first round of stocks, and we have more amazing stocks coming shortly. But now it's time for our trending topic for the week, and given Janine's not here, it's you, Phil.
Yes, all right. I'll do my best to follow Janine's
Fill the shoes.
Yeah, no tinfoil hats, but let's go. Now it's no surprise, oil and fuel has been the hot topic over recent weeks, but we've just seen things ramp up with airliners starting to cancel flights due to jet fuel shortage. Now in Australia alone, we've seen major flight cancellations, with the whole situation potentially getting a lot worse if Trump does decide to bomb Iran's power facilities over the next few days. So naturally, when you think airliners, you think of Qantas. And so let's go and take a look to see what is happening with the share price of Qantas, because believe it or not, this stock has been an amazing performer over the last couple of years before the Iran war started. It's interesting, right? We've got an airliner there, Qantas.
I've never bought Qantas in my whole life.
Yeah, and it's performed beautifully. I mean, if we just get into that chart, I would really want to break it down, because this is where, again, and it's worked out that way that the topic of discussion today is, getting away from the noise and purely looking at price action, doing the things we show here on this show, not only for simplicity, but I mean, it gives you direction, right?
Well, it does. If you're, I mean, we always know that the retail or the crowd's going the wrong way all the time. It happens.
Yep.
We see that, but you only have to look on the street of what people are talking about. And I go back to Buffett. He keeps saying buy and doom. He's not saying buy and boom, he's saying buy and doom. And if things look pretty shite, then it's probably time to look at the market. And that's what I was saying to these people in New Zealand. There's probably 15 or 16 stocks that I'm already ready to buy as soon as they trigger, and I just got to wait for the right time. And so the people that make the most amount of money are the patient ones, but not the ones looking at the market every second of the day and looking at their phones and that. And I say, have a life.
And I think also... stopping to trying to understand why. I mean, we live in this world where we're so focused on wanting to be right or to know why has it moved? Why is it going to do this next? But in reality, you're here to make money out of the market. So the most important thing is when.
Can I answer? Can I actually say that?
Oh, you?
Well, no, sure. No, I don't want to cut you off.
No.
But that came up in my presentation. Well, I didn't bring it up, but people brought it up. They go, but what? And I went, I said, is there any economists in the room? And nobody put their hand up. So I'm not a freaking economist. How do I know what world economies are going to do? How do I know what Trump's going to do? I can't predict what Trump's going to do. I can't predict interest rates going up or down or, supply chains, blah, blah, blah. All I can do is buy and sell. That's it. So why do I worry about anything else? I don't need to understand why something's happening. I just need to have a plan that if the stock goes up, I know what to do. If it goes down, I know what to do.
Yeah.
Because that's all I can do is buy and sell stocks. And you know how many people come up to me after that and they go, oh my God, Dale, you just made it so easy. And it is easy. Just don't put all this BS into your head and just look at the charts. You'll understand.
Because if money's flowing in somewhere, you best be sure that it's moving in the direction you want it. But let's go to the chart of Qantas now. Where it gets real interesting for me, yes, we do have all the issues that we just mentioned. But if I apply one of these momentum lines up through here, we see that Qantas literally touched a level that we may well have seen some, buying come through. We've seen volume come through at this level as well, which is quite interesting. Now, I'm not going to call Qantas as a, reversal just yet, because we do have this gap through here, which we may see Qantas come in, fill that gap and fall on down. But right now, it's important to start watching the stock because we've had 4 weeks unfold in light of the most volatile period as is being reported, and yet we've seen Qantas hold this level for 4 weeks.
If the market was going to crash, it would have already done it.
Right, and so, that's right now, again, proving the point of what is the most important to watch, to follow what is happening, not what ifs. And so to that point, I think right now, as long as Qantas holds this level through here around 770, consistently up here and holding this momentum one, then there may be a really interesting opportunity to ride an extension of this long-term uptrend that has unfolded with Qantas. All that being said, be mindful of this gap. Unless we clear this 950, 970 clearly or cleanly with strong support, it may just be a short-term play up to that level. But nevertheless, now's the time to watch Qantas.
I think I agree with you. Even though I don't generally buy airlines, I do like how Qantas is flowing at the moment. Can I use that pun?
Yeah, I mean, they'll get flying again soon.
While I was in New Zealand, I read the local paper and Air New Zealand cancelled 1,000 flights.
Yeah, it's crazy.
And it's like, wow, and then they're only going to fly to certain areas every second day. So there's a whole lot of things changing in the world right at the moment. But look, to me, I think everything's going to settle down pretty soon. But if you do want the skills to analyse stocks like you've been watching tonight, visit our website, wealthwithin.com.au, and check out the education tab. But let's now get back into our topic and into some more amazing stocks. I'm going to throw it to you, Pedro, because I figure I want to get some sense out of you as well. So how about you take it away with the first stock?
All right. So the next one that we have is realestate.com. Now, most people would probably know this one through looking at the overpriced properties that we have these days here in Australia. Basically, real estate has a structural monopoly and very high margins. They can depict whatever price they want, and real estate agents have to pay it. They came out and said they don't have a monopoly, by the way. So, allegedly monopoly. So housing shortage, listing and pricing power, earnings upgrades tied to property turnover. Now, going to the chart, this one is one of these falling knife scenarios. And I know we always say don't catch a falling knife, and we're definitely not saying to catch this one because this is very much still falling. But it warrants your attention at the moment for a few reasons. First of all, the fundamental reasons, but also the technicals. Have a look at this period back here in 2022 when the stock declined from the all-time high, declined 48%. And don't you wish that you would have bought back here? I mean, I'll move the chart a little bit to the side, right? And I'll hide the current price action. Now, if the stock was currently trading at $250, right? Just say that that's what it was trading at the moment. Wouldn't you be saying, I wish I bought down here in 2023? Don't you wish that you would have bought and then capitalized off 100% return? Well, we're at that stage now because the stock has actually fallen from that high 46%, which is the same, roughly the same as it did back here in 2022. Now, I think that it's important. That's an important point that I wanted to raise because a lot of the traders that I have conversations with, one of their main pain points is their indecision or their ability to not actually act on something, and then they kick themselves because they didn't, and of course the stock runs off on you. But if you have a certain set of rules that say yes, buy, and yes, sell, then you won't have a problem with that. The chart will tell you everything that you need to know. And of course, that comes with back testing and everything that we cover in the course. You need to know how to do it. Of course, this one is not ready yet, but if you would have back tested this and had a look at what happened, how it performed back here, and what things triggered to tell you that this was actually on the verge of that uptrend, well, you just apply that same basis over here on this right-hand side of the chart because, like we always say, we're trying to figure out what happens on the blank side of the chart. That's where the real skill comes in. So it needs to trigger some certain things. Look, just to put it basic, I would say that at least, I mean, I'm not saying to buy when it gets above this level, but 175 seems like a logical breaking point for this stock to break before it comes on the uptrend. Of course, we're seeing a higher volume come into it. It's higher than we have along this previous period in 2025. So we're seeing more interest come into it. It could be the big funds starting to pick it up in light of the coming earnings season in August. So I think definitely this one is one to watch, and you could just basically put a little momentum on the downtrend as well, and use one of the skills that you cover on your book, on Dale's book, could easily get you into this trending stock. So interesting, but just not right now.
Look, mate, I have to agree with you. I mean, it's a nice looking stock, and I do agree with a lot of the stuff you talk about. Not everything you talk about, because I don't want to give you a big head, but very well done for that one. I do like REA Group, but let's take on the next stock, Phil.
Yeah, let's go to the tech sector, Technology One. Now, again, just to, I guess, speak to the fact that we've seen wild times in the market over the last month, this tech stock is actually up, and that shows that. I mean, there's talk now out in the US, Dale, even that they're seeing the tech sector PE ratios are really, really attractive, like under 20, and starting to look fundamentally, and we're talking about a sector that 4 or 5 months ago, the opposite was being said.
Yeah.
And when I look at obviously our tech sector, it's fallen 40-odd%. This is one of those stocks, but I mean, it has a really nice recurring revenue, strong earnings growth as we've seen there, and software is still one of the highest growth areas. It's still earmarked to grow at 20% expected earnings growth. So software is not an area where we, when you talk about, for example, maybe the data centers or the hardware, yes, they are earmarked for growth, but because of the costs and the expenditure and all that kind of stuff, it does require a lot more capital intensive, where software
doesn't.
Right, and so...
but then there's also the argument with AI now being able to write all the software.
Yeah.
Like, if you're a programmer, you'd be worried about your job, wouldn't you?
Oh, you would, yeah, you would. But I think what a lot of these companies are also, I mean, they're using the power of AI to enhance what they've got going as well. So when you look at Technology One, I think what makes it really attractive right now is that we've moved back to trend.
Yes.
And this is a stock that you cannot cannot argue with. And think about tech sectors or tech stocks. They go through these booms and bust cycles. For a stock to be around from 2002 to be consistently making new all-time highs and providing growth, it just speaks to the volumes of the company. This is not your, typical tech play that is driven on potential innovation or that high risk type stuff. This is more stable than others, somewhat defensive, if you will. So it's an interesting spot. I think having a little bit of tech exposure would be something to definitely look at, given the way it's pulled back. And again, we've seen buyers pick up exactly where we thought they would on that momentum line. So right now it's just a case of building a strategy around this one, and we're starting to see multiple times of higher lows being accepted, meaning sellers are struggling to push this one down. The longer this continues in this vein, it's going to lend itself to potential further upside, and I would expect at least now on the way up, the next level where we may find some resistance is around that $32 mark. So potentially for that short-term play, there's an opportunity even up to that $32, about 20-odd%, which is quite nice in itself. But yeah, mine 32, and right now we are seeing buy support.
So let me ask you a question. I mean, I do like this stock, and you are. To me, the technology sector in Australia has a lot of opportunity, and we're seeing a lot of companies. I looked at the top 100 stocks last week, and I went, wow, there's so much opportunity there. It's not funny if you're looking with the right attitude. And what I mean by that is, I know, I've been through GFCs and all the other stuff before it, and way back in the early 2000s, I'd get people. I'd have one phone call, and one trader would say to me, "Oh, geez, I can't find anything to buy." And the next, pick up the phone, and the very next person would say, "I've run out of money. There's too many stocks to buy." So to me, what that showed me very, very visually was that it depends on how we look at the market as to whether we see opportunity or we see risk. And that's a huge thing happening right now. A lot of people are seeing a lot of risk. They're seeing a lot of possible, downside in terms of crashes, blah, 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 blah. But then real traders, or the people that we're teaching, like Pedro was saying, there are people there that are going, wow, what opportunities are there? So when you're looking at the market right now, are you seeing opportunity? And I'll get your thoughts on this, Pedro, before you go into the next stock. Are you seeing opportunity right now, and should people really be looking at putting more stocks in their portfolios? Yeah,
I am, and it's as simple as you look at all the stocks we've shown you, just one look at those long-term charts, and all of these stocks are operating in a trend.
Yeah.
Moving higher and higher. That typical nature or market structure resembles a bullish market. If we were to see the opposite of that and look at something like a Treasury Wines or, I'm just trying to think of other names, but bearish structure, then I would say potentially not. So then there's this discussion around what you're saying. Are we in a pullback territory or are we in a crash? And it's so important to be able to distinguish between the two, because that's when you can truly say opportunity versus risk. And so right now I'm seeing a lot of opportunity at opportune prices. That's the thing, because the closer you get to opportune prices, the better the reward.
Yep.
Sure, there's a bit more risk, but much better reward. And being able to manage a trade, getting in at a better entry position is much easier than trying to manage a trade after buying in, after FOMO 30, 40, 50% upside and thinking, oh, I saw it in the news today, this is when I'll jump in. Instantly, the stock goes against you and you think, well, how do I manage this now? Now I'm already down. It's much harder to manage than giving yourself a buffer to ride the majority of the wave on the upside. So that's where we're at right now, which is exciting. Yeah.
It is exciting, and I was only saying to the people in New Zealand when I was presenting to them, I said the hardest thing you'll do is stop buying and start to sell stocks at the market peak, because everybody's buying and the euphoria is there and everybody's talking the market up. But also the hardest thing is also to buy stocks when everybody else is bearish.
Yeah.
Because you're doing exactly the opposite, but that's exactly what you need to do. But anyway, I'm going to throw it over to you, Pedro, and get your thoughts before you bring us into the next stock.
Yeah, I think it goes against the human intuition, really. And that's why a lot of people find it so hard to be a profitable trader, because most people, they sell in fear and they buy in greed when it should be in the opposite way. And without knowing how to read a chart, that you're just going to be stuck just doing the same thing over and over again. I was guilty of that once myself, and I would be thinking, why do stocks always go down when I buy? Is there a conspiracy against me? And I'm sure a lot of traders are in that same boat, but it's not. It's not that somebody's out to get you. It's not that the broker's out to get you. It's just that you don't have the right strategy, and you need to have that first before you go into the market. And I agree with Phil. I think this is an opportune time to be looking at certain stocks, getting at the right price. I also saw a report came in from the S&P 500 over in America that there's a record number of companies coming out with positive EPS growth forecasts for the next 5 years. So I think that looking at that bigger picture, don't focus on this little short-term pain that we're going through. Have a look at 5-10 years in the future and see which stocks or which companies are going to benefit from long-term trends rather than this short-term pain that we're going in.
Totally all right. So what's the stock, mate?
So the next one is Wesfarmers. So this one is one that a lot of people know. They own the Bunnings. They did have they did list Bunnings separately on the stock exchange, but they own a whole bunch of stuff. They've got exposure to retail, industrials, and chemicals. I think that chemicals is one of the key ones here because they've got exposure to fertilizers, which fertilizer we're seeing having a little bit of trouble now out of the Strait of Hormuz, exporting those critical fertilizers, which are going to have an effect on agriculture. But Wesfarmers has exposure to Australian companies in that sense. So I don't think the market's really, caught onto that yet. And I think that as retail investors and as, knowing where the key levels are, I think that we're set to benefit when this does turn around. So it's got a strong balance sheet and it can surprise on earnings due to diversified exposure. And that's exactly why, that diversified exposure is what really gives it that strength. And I'm seeing a little bit of a theme here with these big companies. They're all coming back to that natural momentum. Mm-hmm. Have a look at, from this low here in 2022, it's established that nice little momentum and it's now just come back to it. And not only that, it's coming back to a previous all-time high, which was a very critical level, say at around that $67 to $68. So it's a little bit away from that at the moment. It could still have a little bit more of a fall, say of around 6%. We can also have a look at what it did back here, how far it fell. It fell that 40%. At the moment, it's done 24%. So it could still have a little bit more downside. But again, much like REA, I think that this is a time to start looking at this and seeing, where the possibilities are. Start researching the company, start looking at the history, start looking at the pattern analysis, and getting ready for that next move. I mean, it's coming back to a real congestion period that it had all the way around here, 2024 to 2025. There was a lot of price agreement over here. Now, of course, the risk is that the downside continues. So I would say that this one is a little bit more risky, but seeing that they've got the tailwind of that fertilizer exposure, I think that there could be a nice rebound on the cards, say at around that $70 level.
Mate, this is one of the ones I've been looking at it myself, so I'm glad you picked that up. So I taught you well when you were a young boy all those years ago, because I actually remember my first chat with Pedro when I started mentoring him, and he was telling me stories about how much money he'd lost and all the mistakes he was making. I went, yeah, that's pretty normal. Yeah. So we'll fix all of that, mate, no problems. And we did. But I also said to him, I know where he's going to be in 12 months' time. I didn't quite understand where he was going to be in a few years' time and being on the camera with me and you. But hey, I'm glad you're here, mate. No problems at all. But I do agree with you on Wesfarmers. I think probably a little bit too early, but I think there's some good opportunities coming in there. So let's move into our last stock.
All right, moving on to S32. How can we go without this one, right? It's got exposure to multiple commodities. It is an aluminium story, but it does have more, so it's not just one a centralised bet. Obviously, the material sector has been flying and really picked up on this most recent rebound that we're seeing. BHP gave you a really nice second opportunity. Rio, Fortescue, they're giving amazing opportunities right now, and S32 is another one. Obviously, with this stock right here, I think the most important level that it's been throughout the history is this $4.13, let's call it $4.20 region, where we've seen the stock on 4 or 5 occasions. I mean, we had one in 18, another one in 2022, again in 23, again in 2024, try to hold above $4.40 and it's failed. Now, what's different this time so far is that we pushed down after breaking through 440 really strongly and buyers have picked it up. So it's the first time in history this stock prices are being accepted on a pullback above 440. That is very exciting. And so right now, we are potentially, if 440 holds for me, and we've seen a really nice pickup through there, if 440 holds, especially on that monthly chart, if we take out the high of March, this could very well go for a run through that all-time high, finally, through that next leg, because it's done enough in terms of when you look at the big picture pullbacks that it's had through time and with price. It is really set up right now to make that next leg higher and take out the all-time high. So,
well, you know what I think was interesting? The last quarter of last year, we were talking about S32.
Yeah, $3.
And so many people go, why are you talking about this stock? Fundamentally, it's crap and blah, 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 blah. And all these people saying rubbish, rubbish, rubbish. Why would you talk about it? And that's why we talked about it.
Yeah.
So, because a lot of people don't understand, they go, the fundamentals follow. The chart always tells us first, and then the fundamentals will confirm what we're talking about on the chart. So that's why, to me, I want to find out what your favourite stock is. So I know Pedro was talking about Coles earlier, but then he changed his mind. But he's a bit flippant like that anyway. So what's yours? Pedro, you can have a think and just pick one though. But what's yours, Phil?
You know what? I'm probably going to say S32. I like when stocks do something they haven't done in a long time or ever. And right now it's looking that way with where it's pulling back and finding buyers. So I think watch your space. And obviously the material sector, it's hot.
Yeah, there's so many hot stocks. Yeah. Okay, Pedro, give us your best shot.
Oh, look, it's hard. There's so many good ones, but I'm going to go with the specky on this one, and I'm going to go Nickel Industries. I think it's got huge upside.
At least you're decisive. Unlike Janine, she picks about 3.
Yeah.
Cool. Well, anyway, moving on. Shortly, we're going to get into our hot stock tip. But first, let's answer your questions. Now, Chris writes, I'm looking to buy SOL for a superannuation portfolio. I like that it's broken out recently and considering a trade now based on a strong March close on the monthly chart or waiting for it to break through the all-time high. So how about you bring this one up, Phil, and we'll give Pedro the next one.
Yeah, sure. All right, SOL. Now, I mean, what's interesting about his email is if you deem March a strong close, which it closed on the high, you'd probably be in this stock already. So that's interesting. And it's gone on with it. Now, we covered Sol, I don't know whether it was on our Monday show 2 weeks ago or 3 weeks ago.
Yeah.
Or a hot stock tip. But I mean, this is one of those companies that I think every portfolio should have a piece of, to be honest. It's just a real nice dividend earner, slow, steady plotter, good growth. Whether waiting for the all-time high to break would be the next opportune time to buy. Again, you've really got to think about the longer it flows on through trend, the more importance needs to be placed on where you place your risk.
Yeah, correct. Because I was just thinking about that because I had that question in New Zealand as well. And I go, well, the longer something goes up, the higher the chances that it's going to stop going up.
Yeah.
So, and the inverse is correct as well.
Yeah.
So, and if you're waiting for another 10% to hit the all-time high, that means it's gone up a hell of a long way to get to that point. Do you really want to get in then?
And so I think that's the big question. Wanting to get in at that point, you've got to realise that at that moment there, we may see some sellers come through. So how you structure that trade, there's nothing wrong with waiting for it to break to a new all-time high.
No.
I mean, sure, in history, but if we look through what's happened, every time we've gotten through to a new all-time high, bang, in 2021, we saw a pullback. Get through here in 2025, we see a pullback. So realistically, we're going to get another pullback through that all-time high, whether you want to wait once it breaks through there and then look for the entry, or, as you said, March was strong, so there's no reason why right now this doesn't look attractive.
I like it at the moment. And if you're not in it already, you know, then work out how you're going to get into it, but also how far do you think it's going to travel. To me, that's the only thing, isn't it?
Yeah.
What's the upside risk on that? And, you know, if 10, 15% is what your goal is, then I don't have a problem with either right now.
No.
I love it right at the moment. Anyway, well, next email is from Shoaib, and he's written, he said, with the recent Middle East developments and rapid swings across sectors, I'm wondering whether trading rules need to be adjusted or if a different strategy is now more appropriate. Market seems to be turning within minutes based on comments from Donald Trump, with energy and other commodity sectors reversing direction almost instantly. Could you also share your thoughts on NHC? So I want to get your thoughts on this first, Pedro. Then I'm going to throw to Phil to get his thoughts on the trading strategy, and then we'll get you to tackle the stock. How's that?
Yeah, let's do it. All right. So I definitely agree that we're at the whim of Trump's tweets at the moment. Really, the market rises and falls just on his words at the moment. And I saw this funny meme the other day where said that back in the days we rely on fundamental and technicals, but now we just rely on Trump and Twitter. That's how traders are playing it. Of course, it's not true. You still have to look at the technicals and fundamentals, but it is definitely more volatile. It's adding a lot of volatility. Now, I do have my thoughts on New Hope, but I'll let Phil, have his thoughts first, and then I'll continue from there.
All right, so your turn, Phil.
Yeah, all right. Well, I thought I'd show everyone with a chart, if that's all right, just to highlight what we're talking about, because I've picked Karoon Energy. Now, Karoon Energy is a stock in the energy sector that, when you look at the chart, I mean, this has been the last, half a month price
That's
action.
a daily chart you look.
This is a daily chart. And right now, if you're feeling the whims of the market, you're definitely zoomed in on a daily time frame.
Well, that's what I'm going to say is, because Pedro mentioned we're at the whim of Trump, and I went, and straight away in my mind I'm going, but are we?
Because we're in most people's minds, it's that anticipation of when Trump says the war will end or it will continue. But when we look at what is happening, and I wanted to bring up Karoon specifically because it is an energy play, despite all of these comments back and forth on a database, we're ending, we're pausing for Easter, we're going to bomb all your power plants. If you just look at Karoon purely from a price point of view, from a technical lens, it's still creating higher lows and higher highs. And to me, the stock is still trending up, doing exactly what it was doing, going back to Feb. And we spoke about this stock, a while back, saying this was a really interesting unfolding, expect price to go up. And so right now, I think, when you zoom out on a weekly chart, bigger picture lens, you look at that and you go, well, that's been the last couple of weeks. Really, it hasn't gone above or below that week's high on the 13th of March. So, when you put it in that perspective, where is that volatility and how is it, affecting you through your trading? And that's why I go back to, unless you're really trying to day trade the market day in, day out, it's not having as much of an effect as what it is being spoken about from what I'm seeing. And this is an energy stock that should be affected. It should be severely. It should be going like this.
Yeah. So I'm just going to give you my thoughts before we go back to you, Pedro. But there's something I've had. I've been, like Pedro was talking about earlier, that seasonality goes back to the 80s. You two weren't even born back then, And so whereas I was investing and learning to trade back in the 80s. So to me, so many times people have said to me, it's the Trump factor. It's different this time. And I went, is it? We've had Cuban Missile Crisis, the Cold War, we've had, Kim Jong-un, all sorts of different regimes, threatening things in the Middle East and, oil crisis, you name it. You can go back over history and there's always some sort of crisis or something happening that you think that's going to affect the stock market, and yet the stock market does what it does. And so to me, the difference is we're talking short-term volatility with a Trump tweet, as opposed to what's good to be trading and investing right now. And that's the difference to my mind is if you're a very good trader and or a very good investor and you understand some stuff, then whatever Trump tweets is irrelevant to you. I couldn't care less what he tweets in terms from a point of view of a trader. I don't care. right? But in a human and a person of this planet, I really care what he's doing, from that point of view. But from a point of view of making money, I don't really care, because as long as you've got the strategy right, then you should be able to make money. And if you're worried about it, like Phil said, that means you're way too close to the marketplace, because it's just noise to me right at the moment that increases the volatility. But I'm going to throw back to you now, Pedro, so you can have a look at the stock and answer that part of it before we move on to our next question.
All right, so I think NHC is a perfect example to outline what we've all been saying, and that stocks will rise regardless, and I think that that's a very fair point. And now I'm not sure if the person that's written in, if he's a student at the moment or not, but I would point him to, if he is a student and if he's got access to our Trading Essentials service, which is where we actually make videos and provide analysis on live stocks every week. We've got 3 of them come out. I've made one on NHC. I think it was back here in January or December, and I was saying that this one's looking quite nice. I applied so much analysis to this for the students. We really had a good crack at it. So I think that this one was actually going to rise regardless of what's going on, regardless of this crisis. And it just needs a bit of a catalyst. And we always do this not us here, but as humans, we always try to rationalize, what's happening because of events, but not knowing that this was always going to happen anyway. And let's have a look at the monthly chart to have a look at what I was talking about earlier in terms of probabilities. And you only need to know the basic strategies from Dale's book to understand that 3 times this stock, once it broke that momentum and it was off, look how much it rose. The first time from that low, it rose 275%. Second time from this low, 600%. So is it going to do that now? Well, the probability says that yes, it is going to do something very similar when you're looking at that overall perspective. And that's what many people don't, because they don't know to go back to 2005. Imagine you're at the barbecue table and somebody says, hey, should I buy an HC? The first answer isn't going to be, oh, you should go back and look at the price chart from 2005. That's not on the conversation, unfortunately. But this is where we have to fix all of that and really have a look at that overall pattern analysis. I think that NHC is looking great. Yes, it could have a bit of a short-term pullback at the moment. It's hit that key resistance of $6, nice round number. It could come back to roughly around that $5.20 where we've had those previous peaks. But I think long-term, it's looking quite nice. So great stock pick. And also, I would say that this was going up regardless of the Trump factor that we spoke about earlier.
Yeah, it was a really good question by Shoaib, so thank you very much for doing that. But I do agree with you. To me, it's always been the market, and a stock will always it'll do what it's always going to do, regardless of short-term volatility, etc. And I always liken it to my analogy is like the Titanic. The captain can make a band play, hand out drinks and throw out life rafts and stuff like that, but the ship's still going down. He's not going to be able to stop that. So if it's going up, the market will go up, and if the market's going down, it'll continue to go down regardless of what Trump does or what he actually says. So thank you, Shoaib, for your email. Now, next we've got Matthew. He has said, I have been with Wealth Within for 3 to 4 years, graduated from the diploma, currently getting close to completing the advanced course. Well done, mate. He says, I'm mostly in the materials and energy sectors and have seen gains of up to 45%, and the year is not finished. Thank you to all. This system does work. Just how well depends on the person wanting to learn. Totally agree with that. And he goes, now to my question, with all the imbalance now, I have noticed some increases in coal stocks. No idea about the commodity though. How does this oil shock drive other commodities if that is what it does or what does happen? Interesting question. So he's saying, well, this is happening, so how does this affect other things?
Yeah, it's a good question. I mean, and just to put it simply to you, Matthew, was it? Yeah. Yeah. I mean, right now, obviously with oil, the supply of oil being constrained, the world looks to what are the alternates, and some of the alternates are renewables, or you go to the old dirty coal, which has been around. I mean, infrastructure is still there. So right now, that's what's happening. Coal is finding some love because of the situation with oil, and the world looking for the next alternative, and whether that is a long-term fix. I mean, again, you know, we can sit here and debate that for weeks and months. At the end of the day, will you buy well? Will you sell well? And right now, when you look at stocks like Whitehaven Coal, when you look at stocks like what's another coal stock? Whitehaven Coal. Let's stick to that one. But there was another one on my mind which was even better. But they're actually moving. Yeah, and Whitehaven's, you know, again, a stock we spoke about many months ago.
Yes, we did.
Huge opportunity back then in terms of buy setups. Now it's taken off, so it's about, you know, trying to find that next opportunity. But again, you know, that is why, hopefully it answers your question. That's why we are seeing a bit of love for coal right now.
Like, I understand the question because, I mean, only last week I did a survey with Finder.com, which I do every single month. And one of the questions was, well, with this war and et cetera, and the oil and the Straits of Hormuz and not being able to get oil, will this really accelerate the push to renewables, et cetera? And I went, I didn't think it would, because to me it's like, well, as humans we're very adaptable. If something's happening, we adapt. It's like, so what do we do? So to me it was like, well, then Australia's going to look at it how we get energy right now, and it could be the opposite. We could be going, well, push heavy to renewables right now because, you know, we don't have stable energy right now. It doesn't matter how many renewables we've got. It's not going to be able to maintain the grid. So let's go and mine some more oil for ourselves and keep some gas here. So it could be the opposite. So there's always different stories around. So, but it's a great question that is asked, is if this is happening, how does it affect this? And the end of the day is, like I said earlier, we're not economists. How do we know? All we know is the stock going up or is it going down? Should we buy or should we not buy?
But I think the biggest part that should spark his interest or his thinking is, why was Whitehaven Coal going up many months before the war? And why was the best opportunity then? So does it really matter why right now?
Correct.
In hindsight, I think that's the biggest part that you should.
Yes,
think
we
about.
can meditate on our navel for many hours, but it's still a navel, you know. No. So
it's a new word for me. Navel. Is that a ship?
No.
No. There you go.
Anyway, Clive's email is next. I'm a long-term investor, so is now the time to start looking into adding more stocks to my portfolio. The recent volatility has scared me, but I think this could be the time to get in and make some good returns in the long run. I love his thinking. I'm going to throw to you on this one, Pedro, because you're the guru on all things with investors.
Yeah, that's right. And I mean, we get a lot of new investors coming through. I mean, as you know, I'm an assessor here at Wealth Within. So I speak to a lot of new traders, and I always ask them, are you in the market already? Are you looking to get in? You know, have you got an existing portfolio? Why have you chosen to study with us? And of course, there's a range of different answers. Now, the question is now the right time? Well, first of all, start with your personal situation. You know, are you in the right mind? Are you in the right position to start a portfolio? That's more of a, you know, mindset and a fund situation. Have you got the funds to go in? In terms of the market is there. You know, don't let it put you off the fact that, you know, you see the All Ords falling by a certain percentage. There's stocks that are flying at the moment if you know how to select them. So I would say that it starts with education. That's 100% non-negotiable. You wouldn't go and you wouldn't be a plumber without going to school. You wouldn't be an electrician without going to school. Don't think that you can beat the market without going to school either. So education does come first. And whether this is a good time or not, again, I would go back to your mindset. You know, like they say, when the student is ready, the teacher will present themselves. So are you ready? Are you ready to take that leap? If you are, well, the resources are there and the ability is there as well. So, you know, regardless of where the market is, you can still make some good profits out there.
Good, wise words of wisdom there from you, mate. I'm sure he's taken those in, and the end of the day is now, it's exactly what I was saying before, you know, Buffett says buying doom. So, you know, if you're worried about the volatility at the moment or it scares you, then that just is a real big GPS signal saying, hey, I don't really know enough, so maybe, you know, grab a copy of my book if you haven't already read it, because once you read this and follow it, you'll actually understand what Pedro is actually talking about and why you don't really need to worry about what's going on in the volatility, but you'll have some rules around how to minimise your risk, protect your capital, protect your profits, and obviously enter in and get out of stock. So check out the link below in the description of this video to get your free copy. As I said earlier, you just got to pay the shipping. But now's time we do get into our hot stock tip for the week. Now, I'm going to ignore Phil. I'm going to go straight back to you, Pedro, because you're all things hot stock tips.
Oh, yeah, very hot at the moment over here. So the hot stock for today is NextDC, ticker code NXT. Now, there's news that has come out of the company where they have secured a $1 billion hybrid funding deal, fully backed by, and I hope I say this correctly, La Caisse. And I believe that's a French word. I mean, they're a company originated in Quebec, in Canada. So I suppose it's French. And I actually looked it up, just quickly. It actually just stands for the fund. So a very good name by La Caisse. Very, proper for what it's used for. But anyway, this strengthens its balance sheet and boosts total liquidity. The capital will be used to accelerate data center expansion, signaling strong institutional confidence without diluting shareholders. That's a key thing, I think. They're not actually issuing new shares that dilutes the existing shareholders. That it's just a funding, a fund ability. So this is a key point. So let's now get into what the chart is telling us, because this is the interesting part that we're seeing here. So you can see that the stock has come back to a key level on the chart, which is around that $11. And let's mark that out nice and clearly so you can see it. So that $11 was a very important level going back to 2020. It was bouncing off. Yes, it dipped below that level multiple times, but you can see that it hovers around it. I would say that the next level as well, above that, which it hasn't reached yet, is that $14 level. $14 is very important. It was a previous all-time high. It failed to reach above it 2021. It came back again, met resistance, and then broke through it in 2024. Now it's bounced off this $11. It's heading to that $14 level. If it breaks through it, then this is going to be a major milestone for NextDC, and you could expect prices to go even further up. I would expect something like if it does break above it, we could expect that break up to that $16, comes back, retests it, and then it's off again. You can see that often stocks do this, and it did this back here in 2023. It breaks through, comes back, and then takes off. So I think that this one is on the verge of that next up move. Let's go to the weekly chart to see what's going on. It's come back to close that gap. Of course, it's now formed a gap that on the downside, which is a little bit concerning, but looking back at its history, it does these types of gaps. It's a very gappy type stock. So a lot of questions that we get is, but what about the gap? Is it going to fill it? Yeah, well, it might fill it. The question is when. Look what happened back here in 2020. It gapped up, but it didn't fill the gap until 2022. So it provides a lot of opportunities to trade and to be in the trade before it fills it. Right now, a more conservative trader may want to wait until it breaks above that downward momentum, possibly around that $12 to $13 before the upside. But I'm seeing this as a nice little reversal happening here on the chart of NextDC. So let's have a look at some volume to see as well if it's supporting the move. At the moment, I'm not seeing a clear increase in volume, which you typically see on the up moves. But hey, who knows? We have to wait until the price unfolds a little bit more and it gets to this momentum. If we do see a break above, then I think that this one is looking very nice, and it could reach that target of $18 by the end of the year if we see that kind of momentum continue on.
So this is a wait for a little bit, or what sort of time frame you're looking at before you might see a buy on this one?
I would say short to medium term definitely is a watch for the moment, but just a watch. I wouldn't be getting in early just on this news, but it's interesting.
Cool. Well, thanks for that one, Pedro. Now, if you do want more from us, check out our video, Buy These ASX Material Stocks. Last chance before the rally.